All right, so welcome back. I am Jason Yarusi of Yarusi Holdings, a multi-family investment firm here in Nashville, Tennessee, and this is our weekly webinar. Today's topic is talking about the state of the student housing market, where we are, what can be expected, and potentially what we may see next. So, a great report that came out from Fannie Mae just this month here, really just talking about the state of the 2022 off-campus student housing update. Now, although we have seen, we'll say, tremendous rent growth, not only in the multifamily sector, but also record highs for student housing for the 2022 semester in terms of rent per bed. There's been a lot of things that have really been constraining student housing for really the past decade. It's enduring the same supply chain issues, the same labor issues that we are seeing coming out of the gate for, of course, multifamily. So ultimately, there's a narrative that during recessions, we tend to see, or at least predominantly in the past, we've seen steady increase of people staying in school longer or going back to school in recessions because they're trying to find more ways to be qualified to come back out here to the job market, right? To have a better basis to compete out there in a more dynamic market. What's happened here over really the last, give or take, 6, 7, 8, 9 years, we've actually seen the number of deliveries come down. And that means that the number of student housing projects that have been put forth have really trended to go off course. Reason being is that over the last couple of years, the amount of new enrollments has been steadily decreasing. It's been steadily declining, it's steadily going down. At the same time, the price for college has dramatically gone up. And as you've seen this here, it's pushed more people to forego, prolong, or just really stay away from going back to school. And we're going to continue to see this, if anything has been true for the course. And even as the number of units available continue to trickle off and put more constraint on the student housing supply, it's going to take more time to really fit the narrative for people to want to come back to school. A big drop off in this, of course, was when, of course, I had COVID, where we saw the large drop off. Actually, the annual asking rents and year-over-year asking rent for growth at off-campus student housing bed declined dramatically, no brainer, at the beginning and onset of COVID. We saw this tip all the way down and then really springboard back up in 2021 to over 8% rent growth. So for the year ending 2021, the asking rents per bed at off-campus student housing properties were estimated at approximately $943 per bed, compared to $871 in 2020. That's from RealPage Inc. That's an increase of $72 per bed between 2020 and 2021, which again is a record high. And it's much higher than the average annual increase of $32 per bed all the way back from 2013. So the 2021 rate was a return to more normalized increase after asking rents had really just only increased by $4 per bed during 2022, and really stemming from the lack of demand that came on from the pandemic. So as we go forward here, we're going to continue to see declining enrollments, and on the other side, rising tuitions, which are going to continue to soften demand. According to the data from RealPage Inc., since 2013, weighted tuition growth, which includes both in-state and out-of-state tuition costs, has risen at a much faster rate than enrollment growth each year. In fact, weighted tuition for 2021 was approximately 2.5% compared to enrollment growth of 1% during that same period. Even during the onset of COVID in 2020, weighted tuition growth still managed to outgrow enrollment growth, abate slightly, as even most institutions even just froze and delayed their tuition increases. So amazing to see that we continue to have tuition growth really just accelerate and exceed enrollment. So it's going to make that student housing developers are going to have to continue to be frivolous or thrifty or open or opportunistic of what they can do with these opportunities. What we have seen on our side is we've actually seen a big push in regards to communities or student housing developments being transitioned into multifamily developments and basically taking us into market rate opportunities. This happened in a lot of areas where the areas have been supply constrained, dramatically supply constrained in terms of the number of multifamily units available, where they're having the same issues from a point of building costs, labor issues. And on that said, it's really hurt for the fact that they can't get new units on fast enough to keep up with the demand and to keep up with really just the trend and the acceleration of rent growth. So what we're finding is that they're taking multifamily, or actually taking student housing and repositioning student housing. So a lot of student housing is really by the bed driven. So you may have a unit with 4 beds in there, and they're going in there and converting that into 2 units, maybe 2 2-bedroom units if the layout works right, or 2 1 and 2-bedroom units here. So they're dramatically increasing the number of units per property here, and then transitioning over to a market rate property. We're seeing that in a lot of places out there. So as you think about the opportunity in student housing, there is going to be a tipping point here where we're going to continue to need some point of output, and we've seen most of that need really targeted to the Southeast. Supply underway for select universities for the fall of 2022 with expected beds for this year. Virginia Tech leading the way at 1920, University of Florida at 1672, all the way down to Georgia State University at 741. Really, with the majority of these properties happening in southeastern states, with albeit Michigan comes out, Northern Arizona University, and Indiana University, and University of Washington are 4 of the list that do not happen in the Southeast, with the majority: University of Florida, Virginia Tech University, University of North Carolina, Clemson University, South Florida, Texas Austin, Maryland, Auburn, George Mason, Georgia, Georgia State, really taking up the bulk of where we're seeing a ton of that supply come on board. So ask yourself today, if you are looking at the student housing market, how can you be most proficient to offer a product that's going to allow you to sustain, to keep up with the need for the supply, however, the inability to match growth with the impending growth of tuition. All right, so I'm Jason Yarusi of Yarusi Holdings. Each week we bring you great topics targeted to the apartment sector, the multifamily sector, how you can use this and utilize this information in your core business. If you want to learn more about us, go down there below, click on the link to learn more. You can find us at yarusiholdings.com. You can find us about everything we're doing, what we're working on. Thank you very much.